welcome to the Everyday Investor. My name's Nicole Edmonds and I'm filling in today for Rav Tour. Today we're going to be talking about investing in multifamily properties. We'll talk about investing in commercial properties and a little bit about joint venture partnering. I have an expert on the topic with me today, Simeon Papailias, and we're going to go through the 4 questions that we ask for any investment before we get involved. So that's 1, what is the return on investment? 2, when do I get that return along with the money I put in? 3, what is the minimum cash amount needed? And 4, what is the risk in the worst case scenario? Don't go anywhere. The Everyday Investor begins in a moment. The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Centre Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
For over 10 years, Strong-Based Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
At Here to Clean, we understand that inviting someone into your home is a big deal. All of our cleaners are carefully vetted to ensure we send the right person to care for your home. We offer a variety of cleaning services to meet our various clients' needs, from small office and vacation rental cleaning, post-renovation and move-in cleaning. We will arrange a team of professionals with the right skill sets to tackle your toughest jobs and get them done right. Email, call, or text us to discuss your unique needs.
Hey there, this is Anthony Maniaci. Here at Maniaci Sobel Altbaum, we're a law firm working for you in all facets of the law. My specialty is working in corporate commercial law and real estate, but we have lawyers that work in all other areas, including litigation and family. Our practice focuses on service with a personal touch, delivering in-depth legal advice and guidance to our clients, treating you as people, not as a number. You can reach us at maniacilaw.com.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
The Real Estate Center is one of North America's leading real estate firms, helping everyday people buy, sell, and invest in real estate. By leading with education, we make sure our clients have the know-how and confidence to make informed decisions, allowing them to reach their goals. Through our vast network of experienced advisors, the Real Estate Center is able to provide a full-service experience across the entire country. Whether you're looking for your first home, an income property, or commercial investment, we're here to help. Visit our website at therealestatecenter.com.
Welcome back to the Everyday Investor. I'm Nicole Edmonds, filling in today for Rav Tour, and our topic for today is investing in multifamily properties, commercial, and we'll talk a little bit about doing that with joint venture partners. I have Simeon Papailias with us today. He is a managing partner at the Real Estate Centre Canada and also a key sponsor of the Everyday Investor.
Thank you for having me, and we're honored to be a sponsor on the show.
Thank you, Simeon. Now, Simeon, we're going to talk about investing in multifamily properties. I think when a lot of people think of investing in properties in general, they might think of having one rental home, one set of tenants. Why would an investor want to invest in a multifamily home?
When you get anything above a fourplex, now you're getting into commercial financing, and it's considered actually a commercial investment. The main reason why people want to get into the asset class is because they're looking, for a little bit bigger of an opportunity, where the income is going to be a little bit larger, and the stability of the investment is what's key, because you're mitigating against vacancy and turnover. When you have turnover on a month-to-month basis, the rest of the apartment building or the property is filled in. So when you lose that one or two tenant, whatever the case may be, you're actually hedging against the loss of that income, and how that in smaller properties, that could be crippling.
Yes.
So in a multiplex scenario, it's not. You're actually budgeting and hedging for it.
So that's interesting, because I think sometimes people would think that investing with more units, having more tenants, is taking on more risk by diluting the vacancy risk.
It's the exact opposite, you're right.
Because then if you have one unit vacant, you're not having no income coming in that month and having to pay the mortgage and the expenses out of your own pocket.
Right. And it's also a lot easier to get a property management contract in place, because the cost also gets diluted.
Oh, interesting.
All your actual capital costs get diluted amongst the number of units. So the bigger the property, the less risk you have at every single level across the board.
That's interesting. So from someone thinking, I'm going to buy 26 individual homes or half of that in duplexes, it actually makes more sense financially if you have them all under one roof.
It makes a tremendous amount of a difference. If you have 26 different properties, you're responsible for 26 different roofing systems, mechanical systems, plumbing systems. You're responsible for lawn cutting at 26 different properties.
Yeah.
So if 4 of those properties get affected by an act of God, such as a flood, we're talking about anywhere between $5,000 and $10,000 of restoration per property. That escalates very quickly. When you have a multifamily home, even if it does get hit by a damage, you're still looking at $5,000 or $10,000 just for one property, just as it would for any other property.
Just more income.
Just
when
more
you have
income,
a bigger
and of course it gets spread very differently. So when you're buying each home for $400,000 or whatever market you're in, call it $250,000 per home, but you buy a 4 or 6 unit building for $150,000 per door, you're going to have the same income, and it costs a lot less.
That makes sense.
So it's a very different strategy. It's just that you're looking at a bigger ticket item off the bat.
Very interesting. Now, do you feel that investors typically start with multifamilies, or do they start with smaller deals, maybe single families, and then do they sell them and upgrade, or is that a natural transition for an investor to go into multifamilies?
I have never met a single investor who started with multifamily.
Yeah.
It is a lot to take on off the bat because it has so many different considerations, and the deal structure is a little bit more complicated than buying just a single residential home or a duplex, for example.
Yeah.
You are contending with commercial appraisals, your commercial financing. So the way the whole deal works and operates is very different, and it is a natural path and a natural ladder of investing. So most savvy residential investors will almost always end up in multiplex.
Interesting. Yeah, I know for myself, when I started, the idea of investing in a multifamily would have been way too daunting.
That's right.
Taking on all those tenants, and like you said, the mortgage rules change, the financing for those properties change. You mentioned fourplex. Is that typically where you're drawing a line between residential and commercial when it comes to financing?
Absolutely, and it's not me drawing the line. It's as per the definition for lending. It's your lender who draws the line at 4. The minute you go into a 5-door property, you are looking at commercial financing and requirement.
Okay, so what does that mean? What does that look like? If we're using a rule of thumb, if we're trying to calculate, look at a multiplex and say, okay, I'm gonna have this much income and this much is going toward my mortgage, what are the key differences?
Value of a multiplex is not determined like residential. So an appraisal for residential purposes is extremely different. An income property is a commercial investment, and its value is completely based on its income. It's blended with comparables. However, the bigger proportionate share in the weight of the appraisal goes to its income, its net income.
Okay, and then for getting that financing, are we putting more down?
We typically are.
We are, and what about interest rates?
Interest rates are higher. They're almost double, as a matter of fact.
Okay.
So if residential mortgages, like for example today, are at about 3%, commercial financing would probably start at 4.25. So
Okay.
typically they're about a point, anywhere between 100 and 200 basis points ahead.
Okay, so we're taking that into account whenever I guess we're running the
Certainly.
numbers on a multiplex before we get involved in it. When we're talking about buying these multifamilies, are we trying to do it in big cities, outside of big cities? Is there a rule of thumb, or does it just depend on what the numbers say?
And again, it depends on your strategy. If you're just a single person looking to get into one, you may want to have it close to where you live so you can control it a bit easier. If you're a real estate investor, location and proximity to your home really doesn't matter.
It doesn't matter.
What you're looking to do is you want to buy strategically. We always have on the go multiple joint ventures open to our clients to participate in, because we have found a way actually to allow the everyday investor, I know it's the name of your show.
Perfect, very fitting.
The everyday investor to participate in bigger deals that they would be not be able to do on their own. So we have open joint ventures where investors come together, they pool their funds, and they buy multiplexes around the locations that we guide them in. So we're obviously Toronto focused,
Okay.
But we have a network across our nation for sure that we work with, and there's many great opportunities out there. But the one that I specifically am involved in is focused on the expansion of the GO train. So there is markets such as Grimsby, just past Hamilton, St. Catharines, Niagara Falls, on the east side towards Bowmanville, where there's tremendous infrastructure spends. And we know as a fact, and this is well researched of course, that wherever transit gets expanded and the infrastructure is improved, real estate really gets a boost.
You mentioned about the joint venture partnering opportunities. So I suppose that would be if somebody wants to get into one of these bigger deals, but now I imagine they cost more than a smaller property. And if they need to put a bigger down payment, that could be more difficult then for the everyday person to get into.
I shouldn't say they can't, because they can, but most people are not going to be able to get into a 32-suite property on their own. You need $3 million down, and amongst all the other requirements. I'm not going to get into the exact analysis of each building, but they're bigger deals. If you're looking to get your savings, whether it's $50, $100, $200,000, you're going to get a proportionate share of the said joint venture. And at that point, you're putting your capital at its maximum use, and you're getting into something that's completely passive as well. You're not going to be called upon to do anything other than provide the funding, and time to time you're going to have all your accounting reporting back to you, but the joint venture continues, and it keeps typically growing as the asset grows, and then the joint venture partners decide to proceed with another one.
Interesting.
For
So it sounds
example.
like there's different benefits and some strong benefits to doing it
You bet.
that way, getting into multifamily.
And
through
it's
a joint
gaining in
venture.
popularity because of shows like this that teaches people that they have options other than just buying a little duplex around the corner from their house. People are getting more and more educated and savvier, and they want to participate in the action for sure.
Awesome. So we're going to hear about some of the returns that these kinds of deals can get us. And you've brought with you an investor who's actively involved in a multiplex deal. We're going to run through those numbers. We're going to take a quick break here. When we come back, more on investing in multi-unit properties. The Everyday Investor has been brought to you by ProFunds Mortgages, fixed returns, real security. The Real Estate Centre Canada, for all your buying, selling, and investing needs. Exteriors, providing you with full-service exterior renovations.
Canadian Real Estate Wealth, Canada's leading authority on residential real estate investment, can help you grow your portfolio, build equity, and find the perfect market for your next investment property. Available both online and in print. Canadian Real Estate Wealth is written by investors for investors. Each issue brings proven, practical advice on all aspects of your investor's journey: property management, financing, alternative investing, and so much more. In 2018, when you think ROI, think CREW. Visit CanadianRealEstateMagazine.ca to subscribe today.
ProFunds Mortgages and its affiliate Valor Capital offers expert service and funding solutions for builders and developers, offering first and second mortgages with a combination of institutional and private lending. ProFunds Mortgages and Valor Capital offer a full-service construction and development package with in-house engineers, developers, builders, planners, and the best of financial analysts. With the many years of experience and credibility, ProFunds and Valor would love to be your added value financial partner. Visit us at profunds.ca.
Hey, it's Jeff and Mark from Exteriors. Exteriors provides you with full-service exterior renovations, including roofing, siding, aluminum, and eaves troughs. We treat every renovation as if it were our own, guaranteeing impeccable craftsmanship. Exteriors Renovations. Contact us for a free quote.
At High Peaks Custom Homes, we understand that your family is unique, and your home should be too. We are dedicated to understanding your vision and bringing it to life with great attention to detail and expert craftsmanship. Contact us at High Peaks Custom Homes to speak with our design team and start your new home.
For over 10 years, Strong Base Interlock and Landscaping has providing professional services to homeowners across the Greater Toronto Area. We are dedicated to ensuring your landscaping resembles the beauty you have envisioned. Our team guarantees competitive prices and the highest level of customer satisfaction through our integrity and commitment to quality landscaping services. For a free estimate on your next project, call us at 416-800-1585 or visit our website at sbinterlock.com. Whatever your interlocking and landscaping needs, you can count on Strong Base.
Like people, businesses have their journey, their path, sometimes straight, but more often evolving, growing, and adapting. And like people, businesses' needs change, creating the need for knowledge in areas like accounting, consulting, and tax. Areas critical to your continued growth and success, all part of the journey, and all part of what we do together with you. So that when your business has arrived, it's ready to keep going. MNP. Wherever business takes you.
Hey, it's Vitali, Rav's door and window guy. Here are 4 quick tips when choosing doors and windows for your home. 1. Get 2 to 3 estimates from a reputable vendor. 2. Choose the right manufacturer. 3. Make sure you have a warranty. And 4. Get professional installation. To book a free estimate, contact us at torontodoorsandwindows.ca.
Welcome back to the Everyday Investor. I'm Nicole Edmonds, filling in for Rav Tour, and today we've been talking about investing in multifamily commercial properties. We've been talking as well about how we can get involved in those deals with joint venture partners. I've got our expert guest on the show today, Mr. Simeon Papailias, and he's brought with him an investor who's actively involved in one of these deals, David Bowen. David, thanks for joining us.
You're welcome.
So David, you're going to talk to us today about a deal that you've gotten involved in. Tell us a little bit about this deal.
Well, I've always been fascinated by transit, so I've tried to look at a multifamily deal somewhere near transit, because typically where transit goes, property values increase.
Sounds like he learned that tip from you, Simeon. We were just talking about that.
He just may have.
Yeah,
Absolutely.
yeah. Okay, and so is this a deal, like how did you two work? Did you two work together on this deal, or was this something that you got connected after, maybe at the managing process, or how did that work, Simeon?
Well, we have structured a number of deals together in the past. This one is no different. David actually has a number of people that he works with and brings into the deals with him. The opportunity of chasing transit and buying multiplexes in those corridors, I reached out to a few of my more significant groups, David's group being one of them, and we're going after the numbers that only these types of deals can produce.
Okay.
And the numbers are staggering.
Absolutely.
Okay, very interesting. This one is, how many units is this one?
This one is 8plex.
8plex, okay. And you said that you went to David's group, so did you do this as a JV, David?
Yeah, absolutely we did.
You did?
Yes.
So, and you brought other people with you?
Yes, I did.
Okay.
Including Simeon and his group. He liked it so much, he wanted to be part of the deal.
You guys are investing
Yes,
on
we
this
are.
one. Oh, awesome. We saw the numbers and just wanted to get involved.
It's unbelievable that smaller markets host so much opportunity because they just don't have the number of savvier groups chasing all these deals.
Less competition.
So much less competition, and that's how you find all these diamonds in the rough.
And there's still opportunity in those
So
areas
much.
where there's
So much.
less active
For sure.
investors. So tell me, before we get into the numbers, which we talked a little bit about and I'm really excited to go through, how did you structure, from a JV perspective, this deal?
Sure, so I have a group of investors, of which I'm one, and Simeon, his team, are another. We got together, we liked the idea of transit. We've been looking for opportunities of 8plex and above, and decided this was so compelling that we had to go forward and invest in it.
And so you put funds in it?
Absolutely.
Along with some others?
Yes, indeed.
And then what about the working side, or is there an active side to this deal?
There is an active side, and because this is outside of our home market, we're both located David is located in the York region. I myself am Peel. The properties are in the Niagara corridor.
Okay.
So we actually engaged a local professional overlooking the properties on a day-to-day operative level. And we, of course, once a month and once a quarter get together with our group, look over all the reports and look over if the property needs any capital expenditures or if it needs any attention.
Okay, so you have a manager doing all the little stuff.
For sure.
Neither of you are driving from your homes to go change a light bulb or mow the lawn.
No, not at all.
Okay. And so tell me, David, this deal is, it's all residential?
Yes, indeed.
Okay, and is it like a bunch of 2 bedrooms, 1 bedrooms?
Right, it's an 8-plex,
Yeah.
6 one-bedroom,
Okay.
and 2 two-bedrooms.
And 2 2-bedrooms.
And what we found particularly appealing was the market rents at the time when we bought. A 1-bedroom was in the 600s, and a 2-bedroom was in the 700s and 800s. Market rent tells us the 1-bedroom should be in the 900s,
Wow.
and the 2-bedroom should be 1,200 and beyond.
That is a huge difference.
Right.
So do you know about whoever owned it before, they just weren't doing the increases or they just weren't educated, or do you have any information on that?
Well, we definitely don't have information as to why they never seized and took advantage of their own opportunity. But when we reviewed the rent roll, which is one of the documents that's reviewed and scrutinized during the due diligence period of acquiring a property like this, we found that the rents were obscenely low, and we had to wonder why. So when we visited the property, we didn't find anything irregular. That got us obviously extremely excited. And the minute we took control of the property, the first thing we did is we started the rent increases. At this point, 4 out of the 8 units have been increased to market rents. As a result of that, and this is probably the most exciting thing of it all, we bought the property for $730,000 under a year ago. We just got it reappraised at $875,000.
Wow.
For financing purposes, which is a more conservative appraisal.
Wow.
So it's just unbelievable.
And that's just from the value add of upping
rent.
those rents?
Up in the rent, yes.
Okay.
No,
We were
no effect yet of the transit, the so-called transit effect. When transit comes there, and it will, you will see another boost.
Wow.
Sometime in the future.
It's not a renovation, but it is an act of appreciation in that you're changing something. It doesn't require you to pick up a hammer and make the place more valuable, but you've made the place more valuable just by increasing those rents.
Yes, indeed.
And we have added efficiencies. I mean, like these tenants are going to benefit from a more centralized refuse system, so the garbage pickup is better. Their experience as a tenant will be better because we look at them as valued clients and we treat them as such. So people are not only happy to live in our properties that we own and control, they actually tell their friends, and we get waiting lists of people from current tenants wanting to live in our properties.
That's a good position to
And
be
that's
in.
the way you do things.
Yeah.
For
All
sure.
right, let's go through the numbers of this property and see what that return on investment is. David, do you want to walk me through the purchase price?
Yeah, it was $730,000. So let's just look at that for a moment. Divided by 8 is about $91,000 a door.
$91,000 per door. And now, so that's something that you look at
Yes.
when you're
Yes.
looking at the numbers before
Yes.
purchasing.
Yes.
Okay, and what was the money that you were in for to acquire this property? So down payment and closing costs.
No, this was 20% down.
Okay.
We had put $182,000 in as a down payment.
Okay.
The closing costs are slightly higher than normal. So as far as the everyday investor is concerned, there's a few costs such as commercial appraisals and commercial due diligence that you pay for. So the total closing cost on this one was just over $15,000.
Okay, so that's something any investor should prepare for if they're getting into
100%.
multi-family
Any commercial investment, yes.
Okay. Okay, and what's the total cash invested?
Just under $200,000, $197,000 and $600.
Okay.
Sorry, $197,600.
Okay, so that's adding up our down payment and closing costs.
You bet.
We're in for $197,600.
Yes.
Cash flow. So we're making money off this property, hopefully. The cash flow, what is that?
Annual cash flow net after servicing the mortgage, the property taxes, etc., is $4,200
$4,200.
per year.
Just for the viewers at home, that's where you're collecting rent, you're paying, like Simeon said, the mortgage, all these expenses, and then you've got leftover some cash, $4,200. Okay, so now the annual mortgage pay down. So like we were just saying, rent comes in, we're paying the mortgage. Some of that's we're never seeing again in interest, and some of it is going to pay down the principal. So what is our mortgage pay down?
Our mortgage pay down is $14,300. And I do want to make a note on what you just said about the interest going away. So there's huge tax advantages to these types of properties as a way of writing off interest that also it makes us a lot wealthier at the end. So these types of investments are preferred by savvier investors because of so many different benefits of ownership.
Interesting. So we talked earlier about perhaps a bigger interest rate, but you're saying that's also a tax write-off.
100% of it.
Okay. Okay, so now we've got our passive appreciation, and I imagine this is where we've had that appreciation from increasing those rents.
Right.
So I'm excited to hear what this is. David?
I do. The annual passive natural appreciation is just under 30,000, 29,200.
Okay.
And then the appraisal, so this was just the percentage of the market.
Right.
The actual number is 145,000 because of the appraisal coming in on the rent increases. So I'm not sure if you want to label that as active or passive appreciation.
That sounds to me like it's more active because it happened as a cause of, or it was caused by you actively increasing those rents, and it increased the value of the property.
So yeah, if we combine the two, we're talking about $145,000.
$145,000.
Passive and active, yeah.
And how long did that take for that to happen, for that increase to happen?
We're talking about just under a year.
Just under a year. Wow, okay, let's...
Do you want to work out the percentage?
Yeah, let's work out the percentage, because with $145,000 right off the bat, I think it's going to be pretty impressive.
I think you'll be impressed.
All right, so we're going to figure out our return on investment, we're going to add up our cash flow, our mortgage pay down, our active and our passive appreciation. We're going to take all of that and divide it by the initial cash that we put in, which was $197,600. So what is our return on investment?
It's just over 80% for the first year of ownership.
Just over 80%. And no renovation?
No renovation yet.
No renovation yet, and you're making 80% on your money.
Yes, that is of course not typical for every year's performance.
Okay.
This is extremely typical of taking control of a property and maximizing the efficiencies given to the property. So your first year is always going to be the biggest and most influential jump, but I think it's very safe to expect anywhere between mid to like 8% to 14% year over year as we slowly turn over all the units in the building and get the rents fully up to par and find other efficiencies such as bringing down utility costs, negotiating better contracts with landscaping and property management, etc.
So there's more value adds that you can see in the near future. Very interesting. Well, I want to thank you both for coming on the show and sharing that. Very interesting investing in multifamily. We talked about the benefits of doing it. It sounds like definitely something that I want to focus my investing toward.
For sure.
David, thanks so much for joining us.
You're very welcome.
Simeon, thank you again.
Thank you for having us.
For you, the viewers at home, thank you so much for tuning in. If you want to learn more about this show or any other show on The Everyday Investor, visit us at theeverydayinvestor.info. We'll see you next week.